let's go now to the world of fintech and venture capital. So in just 5 years, we've seen an increase in investment in financial technology companies. It's gone from $1.8 billion in 2011 to $24 billion and rapidly growing. That's a lot of capital going after innovation, okay? Huge amount of capital. And if you look at this chart, which basically shows you two things, it's the amount of money invested per quarter and the amount of deals done per quarter, you'll see that we are now seeing roughly 115 deals, new deals being funded every single quarter by the venture capital industry, okay? And without asking you to read this incredible eye chart, you're seeing just the top 30 deals, right? So the largest fintech company VC investment last year was $1.2 billion in a single round. That's more than biotech companies are getting, okay? Where it takes you 10 to 12 to 15 years to create a new biological drug, okay? So the amount of money that is pouring in, there's several billion-dollar deals, there's a number of $500 million deals. So the money chasing this opportunity is profound, and as a result of that, you're seeing newly forming venture capital firms that are specialized only in fintech, okay? And that's because what they see is that 88% of all banking executives believe that partnerships with fintech companies will define the future of the industry. Now, is that consistent with what you believe to be true? How many of you are partnering with fintech companies today? Raise your hands. And the rest of you, no? Just not paying attention to the fintech revolution at all? One person in the room? Okay. Two? Okay. So, here's an example of the kind of sophistication moving into this industry. Hans Morris was the president of Visa. He was one of the 3 top executives at Citibank. And he's now put together a $125 million fund, and all the money he's raised has either been from Wall Street or from Silicon Valley, okay? And so their website, as they welcome you, we're driving financial innovation, we're integrating technological innovation directly into the global financial system by cultivating the next generation of fintech companies, okay? And again, most of you probably don't know a lot of these names, but you see a very healthy mix of world-class companies. Marc Andreessen, the founder of Netscape, now runs one of the most successful venture capital firms in the Valley. Sequoia was an early investor in Apple. Excel, right? So you're seeing some very well-established multi-generational venture capital firms, but you're also seeing a number of companies that have popped up recently to target specific areas of fintech, including the blockchain venture capital group, okay? So today there are about 4,000 fintech companies that have been funded that are operating in both the UK and the United States. That number continues to grow. And as you think about what some of these firms are doing, I'm going to cut right past this one. I mean, obviously what I care about for you folks is, as we look at this very complex ecosystem, the one that I care most about is the one that affects you directly, which is the one in the center of this chart, which is the companies that are targeting the banking industry and banking industry profits, okay? So most of you must know SoFi, right? SoFi, pretty well-known name. If you watch the Super Bowl, they were audacious enough to advertise on the Super Bowl, okay? They got mixed reviews on their ad, but this is a company that's getting a lot of traction. They started by, of course, everybody wants millennial money, right? How do you get millennial money? Well, one way is to help millennials deal with this extraordinary burden of student debt that they're carrying. Many of them carrying $100,000 or more of student debt. So the very first value prop that SoFi brought to the marketplace is, how do we help millennials deal with student debt? How do we help them negotiate lower interest rates? How do we actually help them move into loan repayment cooperative situations with their employers? So it was a brilliant approach to drawing the millennial, the ever elusive millennial, into their honey trap, okay? And so their value prop today has expanded from just student debt assistance to jumbo mortgages and robo-investing. They've got some significant investors, including SoftBank, one of the largest global investors on the planet. They've raised $1.5 billion USD in venture capital. They have a current market cap of $4 billion USD, okay? And they've already originated $12.5 billion in loans. And their target of disruption are the people in this room. Okay? Now here's another very interesting example of a company that is being disruptive. It's a company known as KoHo. KoHo is out of Toronto. Okay? KoHo understands that to the average millennial, they couldn't care less who is managing their money, right? They don't have very sophisticated financial needs. All they need is a checking account, a savings account, maybe a debit card or a credit card, and that's about it. So what KoHo has basically said is millennials are digital natives. What they care about more than anything is the digital experience. So what they have done is they've created a black box. There is a bank. It's an unnamed bank, okay? The bank is not branded. KoHo's customers have no idea where their deposits are going. But what KoHo does love, or what KoHo's customers love, is this extremely well-designed digital experience that targets millennials. Now, as a professor of MBAs, I can tell you that they got this right. My students love this app. They love this app because this app was designed directly for them. It helps them understand all their purchases. They know exactly how much they can spend. And millennials are very goal-focused, so a millennial will save money more often than not to go on a vacation or to buy a fun thing. So it's helping you to understand how far away you are from going on a trip to the Galapagos Islands, or how far away are you from buying a bicycle, okay? And you can get approval on a new debit or credit card in minutes, okay? And it's essentially something that allows these users to set all of their own limits, okay? So let's talk about the Funding Circle. Anybody know Funding Circle? So Funding Circle is a smarter way to get a business loan, right? How many of you are in the business of providing loans to small businesses in this room? Okay? So this is a company that's gotten significant traction. They started in the United Kingdom. It's an extremely fast application process, okay? Simple, affordable loans. And this is old now, $800 million lent to small businesses globally. That number has increased dramatically, okay? Recently, in the UK alone, they celebrated over £1 billion lent to British businesses, okay? Their customer satisfaction scores are very, very high. So the Net Promoter Score in the United Kingdom is almost 90%. If you don't know what the Net Promoter Score is, would you recommend our service to a friend? Would you recommend it to others? The average UK banking score is negative 11%, meaning there's less people that would recommend than there are people that would recommend, right? This is the valley of death to have a negative Net Promoter Score. Their Net Promoter Score is 90%. That's off the charts. In the United States, where they're fairly new and they have a lot more competition, their Net Promoter Score is 60%, where the average US bank Net Promoter Score is 10%. So clearly, on this very critical measure, they are doing something quite well. Okay. So if we look at some of the numbers, okay, they've got some world-class investors in the company. They've raised $1.4 billion. They're valued at close to $300 million today. They've now originated $2.5 billion USD in small business loans.